All right, stocks sold off sharply yesterday after the Fed announced a 25 basis point cut, but more importantly, signaled a slowdown in the pace of rate cuts for the rest of the year and next year as well. Joining us right now is JJ Kinahan. He's the CEO of IG North America. And JJ, explain the market's reaction. I don't think it wasn't telegraphed that this would be a cut, but a hawkish cut. So what did the market hear that it didn't like?
Well, I always compare the market to a spoiled child when it comes to rate cuts, and that is no matter how much they get, they want a lot more. And so, again, but the major thing going from 4 projected cuts down to 2 projected cuts, the market loves freer money. And so with that, the possibility of investing, I think really where it starts to come is on those stocks that may not be the ones that normally people invest in, the Magnificent Seven, some of the top stocks, but the next layer, people just aren't going to be as willing to take chances on that because the money isn't as free, and those companies may not be able to get some of the government contracts or some of the loans or whatever it may be that they were getting before. So with that, you've seen the Dow obviously for the last 9 days have a tough time, and yesterday really was a bit of a sell-off of all assets, quite honestly. And I think the really interesting thing around it, Becky, is that as we come to the end of the year, are many people going to say, okay, I've had a pretty good year, I'm going to take profits? Or, to look at the reaction this morning is encouraging in terms of the S&Ps bouncing back in the pre-market. But the one thing I would warn your viewers is this is a triple witching week. So with that, normally volatility.
That's tomorrow.
Tomorrow, exactly. And so today could be another volatile day, actually, and tomorrow, particularly the opens and the closes as people unwind their stocks versus options versus futures. So there's still probably a bit more to go because big moves like yesterday throw off some of those trades people were planning on making.
Okay, you just pointed out a lot of really good things we need to pay attention to. I want to come back to the triple witching and the bounce back today. But first, you pointed out that this is really bad news for smaller businesses. I'm glad you did that because we haven't really talked about it yet today. Let's bring up the Russell 2000. You saw 1,100 points knocked off the Dow, but that was the best performer of the bunch. The Dow was down by just over 2.5%. You had the S&P down by just over about 3%, close to 3%. The NASDAQ was down by 3.5%, but the Russell 2000 was down by 4.4% yesterday. So that really focuses your point on how this is bad news for companies that are not the biggest of the big, that they're going to be the ones who struggle trying to get access to loans and to money. Steve Leisman pointed out that Brian Moynihan told us on this show earlier this week, small businesses are the ones that they're most worried about. For the 1 week, the Russell 2000 is down by 5.5%. So that's a big knock on all of those issues. You pointed out that you're happy to see the bounce back this morning, but we did have a technician on earlier this morning who said, this is not much to write home about. She wanted to see at least 50 points of a rebound or more from the S&P 500 to really say that you're going to get through some of the technical concerns. And your idea about what happens tomorrow with triple witching, you're right. I didn't realize that, JJ. That is something to watch out for. What will you be watching just in terms of reaction over the next 2 days of trading before you really kind of get your feelings about how things are working out here?
Well, I think a couple of things to keep in mind. Number one, do we hold this gain in the futures after everything else opens? How many times, Becky, have we seen in our careers that, things look great in the pre-market, et cetera, and then within the first half hour, we're back down. So that first half hour of trading today becomes incredibly important to me in terms of can we hold it? Because you'll see, I think, oversized volume on the open today, oversized volume on the close. And again, tomorrow, because of triple witching, people have to put in those orders. So I would expect to see some volatility right out of the gate today in terms of a bigger, move one way or the other, not just like 5 points, et cetera, but maybe 20, 25 points pretty quickly in that first half hour. I think that's really going to give us a good sense of the day. Then again, of course, midday, you often get pressure, and at the end of the day. So those are 3 really key times throughout the day. What I'm also looking at, we see VIX spiked 74% yesterday, down 30% in the pre-market. Do people come to continue to buy options for protection and roll those out in the future? And then the last factor that's really going to be interesting, maybe not today or tomorrow, but plays into next week, is there going to be pressure? Because let's face it, if you look at the indices, although as you just quoted great stats of what's happened the last couple of days or the last week, it's been a pretty good year for most people who have been invested all year long. Do people just start taking some profits? Or, like our clients yesterday, NVIDIA, Spotify, the buying was as heavy as I've ever seen. More than 90% of our transactions in Spotify yesterday were buys. NVIDIA, heavy buy. Are people saying good companies? I'm using this as an opportunity to really buy them. And that's what I want to watch for the next few days. Is this a buying opportunity, or is this a, take my ball and go home for many people?